All right, so let's jump into ICICI Bank's third quarter performance for 2025. We've got their investor presentation and the news release here ready to go. And basically, we're going to try to pinpoint what stood out to us the most.
Yeah, there's always a lot to uncover with these things, especially with a bank as dynamic as ICICI.
For sure. And one of the first things that caught my eye was the profitability. Even taking away the gains from treasury operations, the growth is pretty impressive. Profit before tax, excluding treasury, was up 12.8% year over year, hitting 15,289 crore rupees. I mean, that's not a number to just ignore.
No, it's a pretty strong indicator. It tells us a lot about the health of their core businesses. When you look at profit before tax, excluding treasury, you're basically getting a clearer picture of how the bank is performing day to day without the volatility of the treasury operations.
Okay, so we see the core is strong. But the presentation also highlighted core operating profit. And that also saw a healthy bump too, right? It was like 13.1% growth, I think.
Yeah, but it gets even more interesting. If you take out the dividend income that they're getting from subsidiaries, the growth in core operating profit jumps to 14.7%. And that really shows how strong their core banking operations are. The lending, the deposit gathering. It's a sign that the fundamentals are really doing well.
That's a great point. So let's talk more about that lending activity. Their domestic loans were up by 15.1% year over year, reaching 12,082,778 crore rupees. I mean, that's some serious growth. What is driving this expansion?
Oh, it's not just one area. We see strong performance across the board. Retail loans are up by 10.5%. Business banking loans are up by 31.9%. And even the rural portfolio is showing double-digit growth at 12.2%. This tells me there's a healthy appetite for credit in the Indian economy right now.
Yeah, across different segments. And to support all that lending, they need a solid foundation of deposits.
Yep.
Exactly. Deposits are the fuel for a bank's lending. And ICICI is not lagging behind. Total period end deposits are up 14.1% year over year, reaching 15,020,309 crore rupees. It's a good cycle, Deposits enable lending. Lending fuels the economy. A strong economy leads to more deposits.
So they're seeing robust growth on both sides of the balance sheet, which is a great sign. But of course, when we're talking banking, we can't ignore asset quality. What's the story there?
That's the big question. And the news is positive. ICICI has kept a low net NPA ratio, just 0.42%. That means only a tiny fraction of their loans have gone bad. It really shows their risk management is working. And the overall health of their loan portfolio is good.
And they also have that healthy provisioning coverage ratio too, right? At 78.2%. So even if some loans go bad, they have a cushion.
Precisely. That's a sign of good financial management. They're not just focused on growth. They're also taking steps to protect themselves from risks.
So far, it sounds like ICICI is hitting all the right notes. But I'm also curious about their technology initiatives. Are they embracing the digital wave in finance?
Oh, yeah, definitely. ICICI is making a real effort to leverage technology, both to give customers a good experience,
Yeah.
but also to improve their operations.
Can you give some specific examples of that? I always like to hear how banks are using technology to innovate.
Sure. So they launched this new platform called Digis. It's designed to make business banking onboarding much easier, all about simplifying the process for businesses. They're also constantly upgrading their retail lending platform, Islands, which already handles all kinds of loans. The goal is to make the whole lending process faster, smoother, and more user-friendly for everyone.
That's smart, meeting customers where they are, which is increasingly in the digital space. So we've got solid profitability, robust loan and deposit growth, healthy asset quality, and a clear focus on technology. Safe to say, ICICI had a pretty strong Q3.
It seems that way. They're firing on all cylinders and looking towards the future. But before we jump to conclusions, let's take a closer look at some of their key financial metrics.
Sounds good to me. Let's unpack those numbers and see what else we can find. All right, so let's dive into some of those key financial metrics. In the press release, one figure that jumped out at me was the net interest income, or NII, as it's often called. It's basically the bread and butter for a bank, showing the difference between what they earn on loans and what they pay out on deposits.
Right, it's a fundamental measure of a bank's profitability. And for ICICI, NII grew by 9.1% year over year, reaching 20,371 crore rupees.
Okay, that's a respectable growth rate. But I'm wondering how it compares to previous quarters. Is this a sign that growth is accelerating or maybe plateauing?
That's a good question. We need to look at the trend over several quarters to really know for sure. But for now, let's look at another key metric. The net interest margin, or NIM. This tells us how efficiently a bank is managing the spread. between the interest they're charging on loans and the interest they pay on deposits.
So a higher NIM generally means they're squeezing more profit out of their lending activities, right?
Exactly. Now, in Q3 2025, ICICI's NM came in at 4.25%. It's a little bit lower than the previous quarter, where it was 4.27%, and also a bit lower than the same quarter last year, when it was 4.43%. So that makes me curious.
Me too. Should we read anything into that dip in NM?
It's something to keep an eye on for sure. A few things could be happening. Maybe competition in lending is heating up and banks are being forced to lower their rates. Or maybe there's been a shift in the types of loans that ICICI is making, with some loans carrying lower interest rates.
That makes sense. So not necessarily a red flag, but something we'll want to track going forward. Now, moving beyond interest income, let's talk about non-interest income sources. This can tell us how well a bank is diversifying its business.
Absolutely. And ICICI has been focusing on growing their fee-based income, which includes things like fees from credit cards, investment banking activities, and wealth management services.
And looks like that strategy is working. In Q3 2025, their non-interest income, excluding treasury operations, rose by 12.1% year over year, reaching 6,697 crore rupees.
That's a big jump. And if you break it down, fee income alone grew by an impressive 16.3%, reaching 6,180 crore rupees. What's really interesting is that a large chunk of this fee income, about 78%, came from their retail, rural, and business banking customers.
So they're not just relying on big corporate clients, they're successfully getting business from a wider customer base. That's good for long-term growth.
I agree. It shows they're making progress in attracting and serving a wider range of customers, especially through those digital platforms we were talking about earlier.
Right. Okay, so we've covered the revenue side, but let's flip the coin and talk about expenses. How well has ICICI been managing costs?
Well, their operating expenses for Q3 2025 came in at 10,552 crore rupees, which is a bit higher than the previous quarter. But it's important to remember they've been investing in growth.
Like those technology upgrades and their branch network expansion.
Exactly. Those things cost money. But if you compare their expense growth to their revenue growth over the last year, it's clear they're managing their growth well. Their expenses aren't outpacing revenue, which is key for staying profitable.
Now, before we move on, let's go back to those provisions we mentioned earlier, the funds they set aside to cover potential loan losses. How did those look in Q3?
Their provisions, excluding provisions for taxes, totaled 1,227 crore rupees. Now, that's a little lower than the previous quarter, but a bit higher than the same quarter last year. It's a bit of a mixed bag. And provisions can be tricky to understand.
So how should we interpret this? Is it a cause for concern or just being cautious?
It's probably the latter. Remember we talked about how their overall asset quality is strong, with a very low net NPA ratio. So this increase in provisions could just reflect that they're being conservative.
So they're building a bigger cushion just in case the economy worsens. And more loans go bad.
Exactly. And they also have a contingency provision of 13,100 crore rupees. It's like extra protection against unforeseen events or like economic shocks. Shows they're committed to staying strong financially no matter what.
So to sum up what we've seen so far, strong profitability driven by both interest and non-interest income growth, focused on controlling expenses while still investing in things that will help them grow, and a healthy approach to risk management with those provisions and contingency reserves.
Yeah, that's a good summary. It shows a bank that's doing well and thinking strategically about long-term success. But we still have one piece of the puzzle to look at, those subsidiaries. They're a big part of ICICI's strategy, and their performance can tell us a lot about the bank's diverse business model.
I'm interested to hear more about them. They're often the hidden gems in a big financial institution. Let's see how they did in Q3.
All right, so let's talk about those subsidiaries. We got some big names here, putting up big numbers and showing how diverse their approach is. Let's start with ICICI Prudential Life Insurance, better known as ICICI Life, a big player in India's private life insurance market. How did they do this quarter?
Well, ICICI Life has been doing really well. Their annualized premium equivalent, which measures new business growth, reached 6,905 crore rupees in the first 9 months of 2025. That's a big increase from 5,430 crore rupees during the same time last year.
Wow, that's a pretty big jump.
Yeah.
What's driving that growth in life insurance?
It seems like more and more people in India are thinking about financial protection and long-term savings. And that means more demand for life insurance products. ICICI Life seems to be tapping into that demand well, reaching more customers and selling its products effectively.
And it's not just about premiums. They're turning that growth into profit, too. How does their bottom line look? For the first 9 months of 2025, ICICI Life's profit after tax was 803 crore rupees, which is up from 679 crore rupees during the same period last year. And if we look specifically at Q3, their profit after tax was 326 crore rupees, a nice jump from 227 crore rupees in Q3 2024.
So they're definitely moving in the right direction, both for new business and profitability. But with insurance, investors also want to look beyond just profit. There's that metric called value of new business, or VNB, which tells us more about the long-term value being created. What's happening there?
Good point. V&B basically measures the present value of future profits from all those new policies they sold. And for ICICI Life, their V&B was 1,575 crore rupees for the first 9 months of 2025, up from 1,451 crore rupees during the same time last year.
So continued growth in VNB, but there's another metric that gives us even more insight, right? The VNB margin.
You're on top of it. The VNB margin tells us how well they're converting new business into profit. It's VNB as a percentage of the annualized premium equivalent. For ICICI Life, that margin was 22.8%. For the first 9 months of 2025,
That's a bit lower than their VNB margin in FY 2024, which was 24.6%, and lower than the 26.7% they had in the same period last year. Any red flags here?
not really. These margins go up and down because of all sorts of factors. Maybe they change their product mix, or maybe there's more competition affecting prices, something to watch. But with their VNB still growing and strong profits overall, I wouldn't be too worried yet.
Okay, that makes sense. Now let's talk about another important subsidiary, ICICI Lombard General Insurance. They offer a wide range of products, from motor and health insurance to property and travel. So how do they do in Q3?
Well, their gross direct premium income, or GDPI, was 6,214 crore rupees, which is a little less than the 6,230 crore rupees they had in the same quarter last year.
Okay, so a small dip. Anything in particular causing that?
We have to think about the bigger picture here. The general insurance industry has been dealing with some regulatory changes, like a new accounting standard for long-term products. That went into effect on October 1st, 2024, so comparing numbers year over year might not be totally accurate.
Okay, so maybe not a fair comparison then.
Right. But even with those accounting changes, ICICI Lombard had a big increase in profit. Their profit after tax jumped by a massive 67.9% year over year, hitting 724 crore rupees in Q3 2025, compared to 431 crore rupees in the same period last year.
Now that's a comeback. But beyond profitability,
Okay.
how's their underwriting performance? What about the combined ratio?
The combined ratio, the real test for an insurance company. For ICICI Lombard, it was 102.7% in Q3 2025. Now that means a small underwriting loss, but it's actually better than the 103.6% they had in the same quarter last year.
So moving in the right direction, even if they're not quite profitable yet with underwriting.
Yeah, they're making progress, which is what matters.
All right, we've got two more subsidiaries to go, ICICI Prudential Asset Management Company and ICICI Securities. What can you tell us about them?
Both of these subsidiaries are doing really well. ICICI Prudential Asset Management is a top mutual fund company in India. They manage a lot of assets for people and institutions. In Q3 2025, they kept up their strong performance, reporting a profit after tax of 632 crore rupees, a good increase from the 546 crore rupees they earned in the same quarter last year.
So they're benefiting from the growth of India's mutual fund industry and attracting investors with their funds and track record. Now, what about ICICI Securities? They're more on the investment banking side, right?
Yeah, ICICI Securities is a major player in investment banking and brokerage in India. They do everything, from equity and debt, capital markets, to mergers and acquisitions, even wealth management. And they also had a good increase in profit after tax, reaching 504 crore rupees in Q3 2025, up from 466 crore rupees in the same quarter last year.
So it looks like all of ICICI's subsidiaries are doing their part, helping the bank overall, and showing how well a diverse business model can work.
Exactly. They're taking advantage of many growth areas in financial services, which puts them in a good spot for the future.
Well, we've covered a lot today. We looked at ICICI Bank's Q3 2025 performance. We saw their strong profit and loan growth, their good asset quality, their commitment to going digital, and the impressive work of their subsidiaries. It really looks like they're doing well.
Yes, and it makes you wonder, how will all this investment in technology and digital platforms affect how competitive ICICI is in the Indian banking sector going forward? Could this be what helps them get new customers, make things run smoother, and become even more successful? Something to think about.
Some great food for thought. And for anyone who wants to dig deeper into ICICI's Q3 2025 performance, check out their investor presentation and press release. We'll put the links in the show notes. Thanks for joining us on the deep dive.